Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, including news February ended on a generally positive note. All eyes are currently on the geopolitical tensions over the Ukraine and the Crimea, but on the economic front, the news is much more sanguine. But the Americans have reduced their estimate of growth in the final quarter of 2013 to 2.4%. That was down sharply from the 4.1% rate in the third quarter and was due to weaker consumer spending components. These make up the bulk of what goes into US GDP. In New York, equities ended February at a record high and bond yields ended down. The benchmark US Treasury 10-year finished at 2.65%, having never gotten near the 3% level that some were expecting. Gold actually rose more than 5% to end the month at $1,325 an ounce, although it was softer during the last week of the month. Oil also rose about 5% in the month, but all of that was in the first 2 weeks. From then on, it's been stable. Equities rose a bit less than 4% in February, with generally good results being reported. Over the weekend, Warren Buffett's Berkshire Hathaway result was revealed, and there were profit jumps there too, to new records. Despite that, his results trailed the S&P 500. In China, the official large firm PMI came in at 50.2, only just in expansion territory and down from the previous result. China is also widening the bands of its managed float for its currency. A more volatile exchange rate is likely to result. In Australia, the RBA is expected to leave their cash rate on hold tomorrow at their regular monthly review. While there are concerns about their domestic economy and looming labour market tensions, things have been working reasonably well recently. However, that view will be tested later in the week with new key data. December GDP results come out on Wednesday, which are forecast to show only modest growth. And there are growing worries about jobs in the wake of Qantas announcing the 5,000 jobs are to be axed. The next RBNZ review is on Thursday next week. New Zealand dollar rose steadily as last week progressed, and we start today at 83.9 US cents, 94.0 Aussie cents, and the TWI is at 78.7. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.